Welcome back to the Tinubu Conference Day. Tea lovers, coffee lovers, I hope you've topped up. And for new joiners, I'm Dipesh Patel, Editor-in-Chief at Trade Finance Global. We've just had a fascinating discussion about the challenges and the solutions when it comes to launching a new credit insurance venture. And now I'm going to hand over to a great panel session moderated by Richard Wolff and his brilliant panelists, Alexis, Alexandra, Stefan and Oswald. I've been looking forward to this one. I hope you all enjoy it too. Over to you.
So, ladies and gentlemen, welcome at this panel, and this is an important one. First of all, I have 4 brilliant panel members with me who I'll ask to introduce themselves in a second. But this is one which is really current. If we read the newspapers, we see sanctions, we see extreme climate events, we see geopolitical risks shaping supply chain strategies, and everything seems to be changing nowadays. Hence this panel, and if I may ask the panel members to introduce themselves, and maybe we start with Alexander.
Hi, everybody. My name is Alexandre Gesch. I'm the CEO of the Global LEI Foundation. The foundation aims at identifying companies all over the world through one standards, the ISO 17442, not only for facilitating regulatory reporting and capital market transactions, but more and more for cross-border payments, supply chain management, ESG reporting, and any areas really where legal entities needs to be properly and unambiguously identified for the safety of the transactions involved.
Thank you so much. Alexi, may I turn it over to you?
Hello, everyone. I'm Alexi Garati. I work for Allianz Trade, so the world leader in trade credit services. I have an experience as a head of research, macroeconomic background, and now I'm a senior climate change manager, mainly dealing with the program of decarbonization of Allianz Trade in the context of public engagement of commitment of Allianz as a unit.
So thank you so much. A wealth of experience and very different experiences. And Oswald, you can add to that quite nicely. So may I ask you to introduce yourself?
Thanks, Richard, and thanks everyone for joining. My name is Oswald Kaler, and I'm the Senior Digital Trade Advisor at the Asian Development Bank. From an experience point of view, I spent the first third of my career trying to digitize internal processes within companies and getting rid of paper. And the second one, I worked at a company called BHP, trying to digitize our ecosystem with our suppliers and carriers and customers. And kind of encountering quite a few of the challenges that I think we all face in that process. And then ultimately, I worked at the International Chamber of Commerce trying to resolve some of those challenges at a global scale. At the Asian Development Bank, we are really focused on how do we resolve some of those key challenges so that we can digitize trade, so that we can enable all of these use cases at scale.
So, like I said, a wealth of experience. And on top of that, Stefan, you bring a wealth of experience as well. May I ask you to introduce yourself?
Thank you, Richard, and welcome from my side to everyone as well. My name is Stefan Wolff. I'm the chair of the Industry Advisory Board that was formed to support the Digital Standards Initiative, which is hosted by ICC Global, the Asian Development Bank, Singapore Enterprise, the World Trade Organization, and the World Customs Organization. Prior to that, for the last many years, I was in data management, data processing in various C-level roles The last 10 years I spent with Clive as CEO, so Alexandre is my successor, and we're really looking forward to this panel today.
Lovely. And to get the discussion started with all the facets of that discussion, we thought it would be good for you as an audience to hear a short introduction from each of the participants. Starting with you, Alexandre, may I invite you for your short introduction?
Sure. So, as explained in my introduction, the Global Legal Entity Identifier Foundation has been purposely built for the need of transparent and robust identification of legal entities involved in various businesses. It started 10 years ago as a tool created by the Financial Stability Board for risk management and transparency in the capital market, especially around OTC derivative transactions. And over the years, it has been adopted as an identification tool, not only for in the capital market space, but also more and more is being looked at as an enabler of transparency, but also fraud prevention in other processes. For example, cross-border payments, where the G20 has identified the LEI as a tool for enabling faster, cheaper cross-border payments, but also as part of the ICC DSI initiative as an ideal candidate for identification of parties involved in supply chain, in trade in general, in trade finance, linking the goods aspect of identification requirements to financial aspects of identification requirements. So it's also very relevant in the ESG space. Obviously, ESG is a lot about being able to identify your suppliers and ensure that they are in line with your own policies. And this is clearly an area where having a clear public good identifier that is not a commercial endeavor, but a non-for-profit endeavor is quite important. In the topic of today, and I'm sure Stefan will mention on that, we collaborating with the ICC in general, but the ICC DSI in particular, to see how and where LEI fits into enabling their agenda. We understand that we are a small piece of the puzzle in terms of what needs to be done in that space. There's way more than identification needs, but we believe that we are a critical piece of the puzzle that we all want to build together, and we are definitely interested in bringing our piece onto that puzzle. I will pause here to make sure that we have enough time for conversation, but this is the intro I wanted to share, and the willingness of the Global LEI Foundation to support any initiative that aims at standardizing, at making things more transparent, and at making things more efficient at a global scale.
Thank you so much. And I've heard you say that you're a small piece, but a critical piece of the puzzle. And as a credit insurer, I can only underline that, which brings me to the question, why is not every entity in this world in your database? Why does not everyone have a legal entity identifier? What are the challenges?
Well, the system has been built to be a voluntary acquisition system, meaning so as a legal entity, you have to go and ask for an LEI, and you're responsible for managing your data and the maintenance of your data. And it's an important piece of the construct, because we want companies to be accountable in a way, responsible for their own data. It's self-sovereign identity 10 years before it even existed as a concept. So that obviously leads to challenges around, do I need an LEI? Why do I need an LEI? And a number of use cases where I can use my LEI. So the initial use case have been around regulatory reporting. So the regulators were mandating the use of LEI in capital market, for example, in Europe and US and elsewhere in the world. So you had to have one, so that was an easy start. But we need, as a foundation, to multiply grow the value of the LEI. So multiply the number of use cases where once I have my LEI, I can apply it to more than one process, more than one reporting needs, more than one transaction identification need, and that's a challenge that we've been tackling at Glyph and continue to tackle in the next 5 years. I would say that I would also finish by saying that not every company necessarily need an LEI. The restaurant at the corner of my street is a legal entity. Do they really need a legal entity identifiers? You could say that would be ideal, but the need for it is important. Nobody's going to buy a product, if you wish, if they don't need that product. And I think that's what we need to keep in mind as we are building the LEI system, is to be humble about what the LEI is usable for, and in areas where it must be used because it does bring value, demonstrate that value.
And I think that's the way to do it. But how do you plan to work with regulators and people like industry consortia and technology providers to I wouldn't say force the adoption, but to get the LEI adopted on a much wider scale?
So our natural allies in this journey are the regulators. We are created by regulators initially, and we are still overseen by 70 regulators from 50 countries. So we're always trying to get their support in either making recommendations or mandates. The second approach that we have is collaborations with industry associations and leaders in various industries like ICC for trade, like the Payments Market Practice Group for Payments and SWIFT, for example, where by demonstrating together the value of the LEI in the various processes they are the other piece of the puzzle for, if you see what I mean, then we can put all these pieces of the puzzle together in a meaningful way, that it's becoming a no-brainer to get an LEI, and it becomes a no-brainer to maintain the data and ensure that it's used. That includes also vendors, obviously, so engagement with vendors to ensure that they are enabling their customers to use the LEI where it needs to be used.
Well, thank you so much. And let's use the legal entity identifier as the centerpiece of our puzzle and go to the application. And Alexi, I think you would have at least a part of the application of knowing who you deal with and knowing what your supply chain is.
Yes, definitely. Yeah, on all cases, identification is key because, as being part of a global company, we have very strong commitment in terms of sustainability policy. And if you want to be serious in terms of applying a restriction that you have on certain form of businesses or companies, because it has been evidence that those companies were exposed to significant controversies, you need to know precisely what you are speaking about when you identify a company. And so the capacity when you unleash, when you develop, when you produce your sustainability policy, your capacity to be super serious in identifying correctly the companies, the mother companies, the subsidiaries, who is doing what, is the most serious aspect of restriction. When you have restriction when developing your sustainability policy.
If we talk about ESG related aspects, that's your job, right, Alexi? What can you say about that? What can you share with the audience?
Yeah, as a few words of introduction on why is it so important to develop transparency in the organization of supply chain. I have a background of an economist, and for me, transparency and efficiency, this is the same word. You have a very famous economist, which name is Fama, who studied for financial markets the notion of efficiency and transparency. And my main conviction is that transparency and transparency related to regulation is not something bureaucratic. This is not something which is on the side and which bring administrative trouble. That's the inverse. It creates a lot of value and it will create a better allocation of capital. This is the main purpose of the theory of Fama. With higher transparency, you have a better efficacy of the market, better prices mechanism, better capital allocation, better investment decision, lower volatility and creation of value because of higher resilience of in your organization. So in an ESG perspective, First of all, being more transparent in terms of organization of your supply chain and the different things of this supply chain with ESG factors. You can first decline the cost of your capital, because I guess that everyone in the room is aware today that banks, financial markets now introduce ESG factor when deciding to fund the company via capital or via credit. So it means that ESG factor now in terms of credit decision and credit appetite of the financial sector is super important. So the higher your transparency as a company, and the better the access that you will have to finance your activity as a company, and notably an international company. Second, capital allocation, investment decision. Organizing and doing an assessment of your supply chain in terms of ESG performance allows you to better understand the risk of transition. The risk of transition, this is the risk to be exited from the market because your competitors are better than you in terms of environmental performance, for example. So it means that you will have all the companies globally will have to take very significant decisions in terms of reorganization of their supply chain. And so in this perspective, this is very important to be super transparent and take accordingly decision to transform the organization of your supply chain. Third, when you are transparent in terms of ESG credential, in terms of ESG performance of your supply chain, you avoid penalties. Penalties from the regulator, from the states, and from other countries, because you have to be aware as well that ESG factors will be more extensively used as disguised form of protectionism. And so the better you are in terms of ESG performance and the higher the transparency, the lower the probability to be exposed to sanction or penalties. The increase of the resilience of your supply chain is key in this area, because, for example, when you develop a double materiality analysis in the organization again of your supply chain, because the double materiality in the context of CSRD is super oriented towards this notion of supply chain. And so double materiality analysis will allow you to identify the weakness and the strength of your supply chain. And so it means that sometimes, because of interconnection, you are not aware of some very critical element of your resilience. And this assessment is very important to provide a rational and analysis of the strength of your supply chain. Fifth element, the trust of different stakeholders, investors, clients, suppliers. Now, everyone is expecting you to provide the maximum information on the ESG performance of your supply chain. And then, and this is maybe the most important, the stability of your balance sheets. Working on the sense of transparency of your supply chain is also looking in depth into the question of stranded assets. Are you exposed in the future because of transition to a certain depreciation in the value of your machine, in the value of your assets? So providing this assessment will allow you again to be stronger in the future. So for all these reasons, for me, working in the sense of transparency in the organization of your supply chain is totally the inverse of something bureaucratic. This is the contrary. This is the most needed decision that you need to take today as an international company.
Now that makes perfect sense. But if I think of ESG, I also think of reporting. I also think of legal requirements. What are those legal and reporting aspects that you can see, Alexi?
Yeah, the different initiatives are very known. You have, of course, the CSRD, and you have the CS3D. You have also the German Supply Chain Act. So they are the most significant initiative at a global level. And again, those regulations are there to really bring some value. And I know that nowadays there are discussions at European level because countries and economic countries are in difficulties, notably in terms of administrative burden. I come from France, so I know what I am speaking about. And there is like a trend nowadays to reject a bit the supplementary burden of administrative work that those regulation represent. But again, I am personally implicated in the production of these statistics. I worked on the environmental aspect of ESG for CSRD. So we in Allianz, we will produce our first CSRD report for this year, reporting on 2024. And I can tell you that the number of potential initiatives that those reporting exercises has created is immense. Just one example. You have to report, for example, the carbon emission related to your business travel activities, and in particular, the carbon footprint that you generate when you travel with planes. And I can tell that it was a huge opportunity. It was a great opportunity for streamlining the travel policy of the overall company. And so it means that you need to clean the data. It means that you need to be audited. It means that it will take a big amount of time and to generate a lot of work of coordination with different departments. But the result is that now we are capable to discuss directly to the board and provide a very clear description of the quantity, quality, geographic destination of all those travel policy. For the first time in history, we have an overall assessment and super transparent analysis of the travel policy with high quality data. We aim at a the highest standards of reporting, and based on that, it brings you internally a lot of credibility to discuss any topic. So in the example of the travel policy, based on the analysis that I did on the travel policy, I was really at the center stage in terms of speaking on how to streamline the travel policy across the group. So that's not only a question of ESG factors, carbon footprint. Of course, this is the most important, but there is also costs and overall organization of the company. So people working in this area of the CSRD, for me, will have key influence in the future in the organization of companies.
And this is largely internal, right? But you've got a much wider view, I think, knowing Allianz Trade. And why is it necessary to have that wider view than just one's own company?
Yeah, this notion of having a wider view when you are dealing with the transparency of your supply chain is key, because fundamentally speaking, and in terms of economic theory, we are speaking here about network theory, organization of your supply chain. And this is very complex in a world where we are really integrated, where the organization of supply chain is very complex. Of course, that you need to develop an analysis in terms of interconnection. And so this is very complex. And so that's why the ESG transparency of your supply chain and the identification of a risk factor that you have alongside this analysis is much more wide than the only performance of your own machine or own organization. And so, for example, in terms of reputation and in terms of ESG standards, you can be exposed to controversies if one of your supplier or one of your clients to which you provide key services are exposed to significant controversies. So it means that you need to develop as an international company, but also as a local company, a system of information covering efficiently any element of controversies in relation with your value chain, either suppliers or their clients. But you need to control the information and anticipate any accidents. So this is why you need to develop this wider approach. Second, in this wider approach of analysis of the supply chain, this is the scope analysis of emissions, scope 1, 2, and 3. Of course, we know that scope 1 and 2 are directly under the control of you, but scope 3 And for a service provider like us, this is the most important carbon footprint that we have. Scope 3 is also super important in terms of generation of emission. And of course, that you need to really be aware about the integration and the economic relation that you have with your suppliers and with your clients, and to be technically capable of seeing which element in the organization of the value chain is the main contributor to the scope of your emotion. So that's why here in Allianz we have developed an approach in terms of clients looking at the carbon intensity of our clients, that we are already capable of mapping the different client of us, but also soon the suppliers, which have a higher or lower carbon intensity compared with the markets. This element is key. And at last, for the wider perspective, you have also the analysis of credit risk. Credit risk in relation with physical risk. Physical risk, this is the risk that because of a major climate event, because of an extreme event occurring somewhere, there is a major disruption in the functioning of your supply chain. And I can tell you, as an employee of a trade credit insurer, that I have the impression that this physical risk is generally underestimated. What we see in terms of climate events is that we have a significant increase in the frequency of extreme events. And it means that today and in the future, companies will be more and more exposed to significant disruption in the functioning of their supply chain. And as a trade credit insurer, looking at the creditworthiness of company, we need to integrate this physical risk factor. And that's why we need to have the wider outlook with key partners of us, with key suppliers. This is not sufficient to know what this supplier is doing. We need to geographically identify the physical risk to which those key suppliers are exposed to.
Well, thank you so much. And that joined the first two pieces of the puzzle, because you cannot look at the outside world without knowing what the outside world is. And that's what that's what Alexandre was talking about with the legal entity identifier. Now, let's add a third piece. And Oswald, that might be yours, because the third piece here goes into physical risk, like Alexi just mentioned. It goes into export controls, fraud, and all that fascinating stuff. And I'm sure you've got a lot to share with the audience on that.
Thank you, Richard, and thanks, Alexis. That was really interesting. I really enjoyed that. So when we have a look at this this entire landscape, there's so many different use cases we can touch on, but fundamentally we think about the digitization of trade and trade-related documentation and information. I think before I even start, I'm going to echo what Richard also said, which is, Alexander, I think identity is probably one of the most important elements of it. So I think addressing and solving that's going to be enormously valuable. But in short, when we go back, I remember going to my mother's office like 35, 40 years ago, and it was interesting the way in which they did business. There was a physical inbox and outbox on her table, and it was someone's job to collect documents from her table that was in the outbox and actually move it to the receiving office inbox. And when you think about the journey that we've gone through from that day, where everything was physical and everything moved at the pace of a human being, the internal organization's digitization has unleashed an enormous amount of value. We no longer do it that way. You send documentation around the world at the speed of light. And when you think about the use cases that paradigm shift enabled, workflows, reporting, analytics, compliance checks, all of these things have been able to be automated because a lot of that data that used to be in physical documents and physical cabinets and physical archives is digital, and you can do so much with it. Now, when we have a look at the broader ecosystem, it's one of the reasons ADB is working with the International Chamber of Commerce and Stefan Wolf on the Industry Advisory Board, because the key question is, how do we achieve that at scale globally when it comes to how we share information within the ecosystem? Unfortunately, even though we've been transitioning for over 2 decades from a physical distribution of information in the ecosystem to a digital, I think, Stefan, the latest numbers are something like 3% or 4% of trade documentation is actually digital. And that is enormously challenging when the foundational documentation and information that we use in our supply chains are physical. And then we try and add on to that additional data points on things like ESG, as an example. How do we do that at scale really quickly? Because at the end of the day, all of this should make trade simpler, cheaper, faster, not more complex, more challenging, and more costly, right? So how do we approach that? So fundamentally, step one for us, and I think identity is core, because you need to trust. From a data point of view, I need to trust I know not just who my customer is, but who my customer's customer is, or further into my supply chain. As someone who's run massive analytic projects in my past, one of the key challenges that you have, for example, when you try and do advanced analytics, is just cleaning up data. If I knew that the LEI existed a decade ago, it would have been cheaper for me to give every one of my suppliers an LEI and have clean, reliable, trusted data for my analytical projects, as opposed to having some really expensive analytical staff spending time cleaning up data. Going, does PwC Australia and PwC Oz, is that the same organization? So that's the first foundation. How do we resolve identity? And I think the key pillar for all of us is, how do we work with both the private sector and the public sector to scale that out so that it goes a lot quicker, that we accelerate the adoption of this. And I think it comes back to making the case for change and helping clients and partners understand the use cases that are going to be most valuable to them, to their bottom lines, when they do activities like that. The second one is, when you think about financing, it really is a document process, right? Whether it's a commercial invoice, a bill of lading, certificates of origin, warehouse receipts, there's an enormous quantity of data. And when we think about, again, coming back to 40 years ago, that transition from physical pieces of paper to digital wasn't necessarily an activity where we all had to go and convince 160 million businesses globally to change the way they operated. It was something that was a natural evolution where people saw, oh my God, this is amazing. Here's the benefits. I'm going to invest and buy computers. I think it was called WordPerfect at the time, buy WordPerfect and start producing documentation. So we need to fundamentally simulate that same change. And I think it's one of the key things that ADB, ICC, Stefan Wolf, we're all investing time into saying, how do we work with those productivity applications that are used in the world today to produce these documents? And when someone clicks the print button before it goes to a PDF, how do we ensure that we solve some of the data challenges on that? And is there any way for us to inform the industry to do that in a way where that data is trusted, reliable, and verifiable, so that we can actually get to trade that is simpler, cheaper, faster? If you're a financier, if you're a bank or a factor, getting 1 million invoices that all have different data points on them, is that invoice issue date 01/04/2024? Is that the 4th of January, or is that the 1st of April? We need to address those data challenges so we can make it cheaper for that data to transport, so that we can both enable the basic use cases, like how do I ship my goods, and the more impressive use cases like compliance, ESG, etc.
Now, thank you, Oswald. And there are a couple of questions from the audience. And one of them is very relevant to what you just said. Can blockchain help us achieve this greater transparency, trustability, etc.? You're on mute.
It's a great question. I hope I have the next hour to answer that. No, I'm kidding. So in short, I think there's really fantastic technologies out there. So there are technologies like blockchain, whether that's private permissioned or public permissionless. So you can imagine something like a Hyperledger, where you have an ecosystem with some of your customer suppliers, And then you have others like public permission lists, where you have like the Ethereums of the world, where you don't necessarily need to get your entire network built, but you can piggyback with something that's accessible to all. That being said, I think what the industry has learned over the last 5 to 10 years is that applying a technology on any use case doesn't necessarily make sense. So my advice to people would be is first look at the use case and then figure out, does blockchain actually fit that use case? Now, when we look at digitization of trade globally, the reality is that the non-blockchain based solutions currently has the higher market share. So if you look at like Stocks and Bolero and some of these solutions, they've been digitizing trade for over a decade without any challenges. So the reason I share that is not saying blockchain's bad, but just that either one of those two approaches can actually work. The biggest thing, advice that I would give is make sure that those solution providers are leveraging standards and are open to integrating with the broader community. So what you want to make sure of is that you don't end up in a situation where you select a solution, you love the solution, and then you either go to your bank or you get to a port and you go, please, can you log into the solution to verify the information? And they go, but I already have 10 other solutions. I don't want to necessarily teach my staff another login, another page, and another workflow. So kind of helping us facilitate this engagement with these organizations to say, let's make them interoperable so that organizations can get access to the information so that not the entire planet has to sign up to your decision. And I think if you think about standards, that sounds very high level, but let's use Glyph LEI as an example. Regardless as to whether it's a blockchain solution or a non-blockchain solution, you know that if LEI is used, that is a harmonized way of dealing with identity. So you know if two solutions are using the LEI, you know that the identity that's associated with that trade can easily be interoperable because that data is consistent. And it's the same when it comes to the underlying documents and the solutions. Make sure they align to the ICC's key trade document elements framework, because similarly, again, regardless as to what your decision is, you know that other parties can actually get that data simpler, cheaper, faster without having to do a lot of transformation.
I just saw Alexandre raising his hand. Do you want to reinforce what Oswald said, or do you want to vehemently oppose him?
No, just very quickly reinforce by saying that it's not only about identification of a company, but it can also be about protocol that you can use across platforms, being traditional platforms or blockchain platforms, that enables, for example, a digital signature in one platform to be recognized by another platform if it's applied on a trade document. So that's why at Glyph level, we've created the VLEI, the Verifiable Legal Entity Identifier, and a credential system that is technology agnostic on purpose. We could have built it on one blockchain, but then it would not have been used on another blockchain, if you see what I mean. So I think very much in line with what Oswald said, it needs to be, some of those standards needs to be protocols, not platform plays, and identity is definitely one of them.
Here's the question from the Dutchman, and I'm sorry, Oswald, I'm going to have to ask it to you. Everyone is going to ask, what's in it for me? Why should I participate? What would your answer be?
I love that question. I'm going to start off the answer to that question by going, it's very unnatural for us to see an industry invest in the same program for 6 years without seeing that scaling result and continue to invest. So it's fascinating. Normally when you have an R&D project and it fails after 2 years, you kind of go on to the next thing. I think the reason you keep on seeing banks, MDBs, countries, and larger organizations invest into this paradigm is specifically because the value proposition is so enormous at the end of it. So to be very specific, I'll give you a specific example. If I'm a mining company and I'm investing a lot in ESG, so I'm investing making sure clean water, etc., etc. I'm not using slave labor. I'm paying my people a decent wage. I want to extract that economic rent from my customers. If I'm making sure that my call is really clean and I want to go into the Japanese market, again, I want to make sure that I extract that economic rent, because that's actual dollars that I can get back out of the industry. And the most efficient way, the most cost efficient way to do that is through digital. And that's the challenge, right? At the end of the day, can you enable these use cases using paper or PDFs? You can, but it's extremely expensive to do that for every single transaction and every single trade and verify and validate it. The second order challenges, and again, if you think about a company just shipping goods from one country to another, the better quality data you have informs your analytical investment. So I have many customer and stakeholder engagements that I have where they've invested a ton of money in their analytical products, but the results out of those analytical products are not that great. I'll give you an example. This comes back to the LEI. How many of my customers are also my clients? How many of my clients are also my suppliers? How many of my suppliers are also my customers? How many of my customers' customers are my suppliers? I want to use that analytical insight so that I can actually have better deals with those customers. And again, in a world where identity between your procurement division and your marketing and sales divisions isn't aligned, it's extremely expensive to actually get the answers to those outcomes. Very similarly, when it comes to the carriers that I use, which ones are safe, which ones are using clean diesel as an example. A lot of these questions you can answer using the existing kind of data heavy, PDF heavy approach, but they're more expensive to answer. So what I tell a lot of stakeholders is the following. Firstly, by investing in trade digitization, a lot of your existing analytical investments are going to become more valuable without you doing anything, because the quality of the data feeding into them are going to become more reliable, verifiable, and accurate. The second objective is that data in your ecosystem is either going to help you extract additional economic rent or help you gain entry into markets where you potentially currently can't gain entry into markets. I can spend an hour just going on the individual use cases, but I'll leave you with this. About 2 months ago, I sat with an organization looking at their projects portfolio when it came to trade digitization. A tenth of the value that they've projected was in the let's resolve the EBL portion. The other 11 initiatives that made up almost 9 billion of additional economic value for them were all the subsequent things they could do once they were digital. And I think that's kind of where a lot of the value comes in. It's not just about getting into a port quicker, simpler, faster. It's all of the other things you can achieve. Sorry if that was too high level. I hope it wasn't.
No, it's not. It's not. And it ties in perfectly to a question from the audience, which I'll ask to you, Oswald, and then to you, Stefan. With all these advantages, which are blindingly obvious, what's the biggest holdup? Why isn't everyone investing in this? Why isn't everyone participating in this?
Well, I think I'm going to try and keep it brief, Stefan. So I'd say it's three things. One is, if I'm a business and someone tells me adopt the UNC FAC standard, I have no idea what the hell they're talking about. I don't know what they want me to do. I just go into Excel, click new template invoice, and I complete an invoice, right? So I think that the first key gap is we've made it enormously difficult for SMEs to actually get on board. And I think that's where the DSI's 2.0 strategy comes into play. We need to provide the solutions in that Save As button in Excel, in Google Sheets, in QuickBooks and FreshBooks, etc., so that we eliminate the complexity of trying to explain to SMEs what this all means. I think the second thing is that, I think there's some coordination organizations globally that can play a bigger role in establishing, for example, in a KYC process, where does the LEI fit and where's the value that should be maintained, and how do we potentially make that a rule, as an example, so that we can actually start facilitating the demand side of the equation too. And I think what you'll see, and this is, I think, the good news, is over the last 5 years, we've invested as a global community, the WTO, WCO, ICC, all the acronyms have invested an enormous amount of time to get the legal reform bits working. You would have seen the UK, Singapore, France adopting the model law for electronic transferable records, and there's more to come. And a lot of time has been invested in understanding the data challenge. And what you'll see in the next 5 years is us actually now becoming quite practical and saying, how do we implement these solutions at scale so that over 160 million businesses on this planet can actually achieve the value?
And that's the question to you, Stefan. How could we do that? How can we implement at scale?
First of all, I have to say I'm really excited about the contributions from the three panelists before me. There's not much to add to all of that, but I would like to offer you a different perspective, perhaps, just to do a recap and try to elevate yourself. Everybody's talking about digitalization, but what does that mean? More computers? No, we have computers for the last 50 years, so there must be something else to it, right? Another angle, whenever I'm in webinars or panel discussions and there are huge audience, I sometimes ask the audience in the beginning, who of you is using paper? And almost no hand goes up. And this is a complete paradox because Oswald just rightfully said there's so many, billions of papers being produced just for trade. So how is that? Well, first of all, we all use computers within our organization. As also rightfully pointed out, there are ERP solutions, there are invoicing solutions all over the place. So we're all using computers internally. And in many cases, we have customers and suppliers that we have already hooked on through APIs, and they can exchange data and everything else, all on a proprietary kind of basis, right? There's an SAP interface to Oracle, and there's an SAP interface to Microsoft, but it's all proprietary. The problem is when you start to deal with entities abroad. This could be new entities, this could be existing entities. You have all kinds of legal requirements for paper, you have all kinds of breaks in technology streams and things like that. And all of a sudden, paper becomes, the exchange protocol, if you like, for the information. And let's face it, and this is another, drop of, water that I want to put into the wine. Let's face it, paper, as slow it is and as cumbersome it is, it has one advantage. Everyone can trade with everyone else, right? You do not have to set up a project first to do a IT integration when you want to sell tins of pineapples to somebody else, right? So paper is a universal language, is a universal protocol that everybody's using. And when I say paper, I also mean PDFs and derivatives of that. So absolutely clear, there is also cost associated with digitalization. Now, the big firms, and Alexis, you made this very clear from an Allianz point of view. The big firms are all doing this because the benefits are so clear to them, right? But think of the 100 and whatever million of SMEs out there that use excellent work to produce their stuff. They have no IT skills, they have no budgets for all of that. I think we need to help them. That is, I think, the key to the adoption of digitalization. And what does that mean? It means, and DSI was really running a great job over the past years to flesh this out. We need, first of all, standards. We need data standards for the exchange of information. Some refer to this as the machine-readable, data. Not PDF anymore and trying to interpret this somehow, but having clear records, where you understand the data that comes your way. That's one thing. The second thing is we need to look at process organization across organization, even across countries. It's not just the exchange of data. There is a lot of processing associated with that and requirements. My favorite one, for instance, is singularity in the Melita role, that you have to make sure that a document is an original and only at the hands of one organization at one point of time. How can you do this digitally when you can produce as many copies as you like of your records? So there are challenges there which are addressed, and I heard blockchain tokenization is one answer to that. But then you have the question, if one entity is on this chain and the other one is on that chain, how do you solve singularity between the parties if you just transfer data from left to right. Another very important aspect are the data standards themselves. So the DSI work, great work on key trade data elements and all the standards that are related to data elements. I can really recommend to read that report. And again, to Oswald's point, to understand what UNCFAC is saying, right, and what others are saying about data standards. Very important work. The other piece of work, and I had the chance to chair the work stream that worked on that, is once you talk about digitalization, you talk about computer-to-computer interactions. And all of a sudden, you enter a new universe of security risks. And fraudsters can break in, hackers can break in, and you name it, right? So we need a higher degree of security. We need a higher level of trust in the system. And at DSI, we were actually, there's a document called Trust in Trade where we say we need an entire trust layer underneath the information layer in trade. Now, that's another challenge for the industry. How are we going to do this? There is no mainstream yet. There is no common understanding yet. Countries do it differently. You have regulation in one country using, for instance, identity protocols like SINPASS in Singapore or EIDAS in Europe, completely incompatible. So the aspect of trust in trade is a challenge that we all need to resolve. This is the puzzle that we have not solved yet. And I think if you take everything together, data standards, trust in trade standards, as well as process standards, then you have a chance really to build solutions that will also be available at an affordable price to SMEs around the world.
Oops. Yeah, there I am. Thank you so much, Stefan. And I can feel the passion that you're radiating. Now, I would like I would like more people to have that passion. So how can people participate in the ICC Digital Standards Initiative, the DSI, as you say?
The DSI initiative is actually a small team. It's not a big organization, right? Headed by Pamela Ma, and she does an excellent job in running this. But it was very clear from the beginning that you cannot install a team somewhere in the world that solves all the problems for everyone else. This is not the approach. So we have the 5 sponsors of the project. Yes, they have vital interests like the Asian Development Bank to close the trade finance gap, as they call it. So there are lots of good things happening there. But it was very clear from the beginning that we need industry buy-in. And so an industry advisory board was created. It consists of roughly 30 institutions at the moment. And this industry advisory board has a number of roles, if you like. Number one, the experts from their team work on all these standards, work on all these documents that we publish in the end. So it's the input from the industry that you can see in those documents. Number one. Number two, we need industry buy-in. So we need promotion. We need multipliers who take the message back into their organization, into their associations, even in their entire industry. And that's an important aspect. And last but not least, we should also sometimes take some time to think, right? To come together in a think tank kind of approach. Let me give you an example. Everybody talks about trade digitalization and standards and everything else, but at the same time, I can use ChatGPT to generate an invoice automatically. Also, I think you made this claim once, that most trade documents can be completely automatically generated by Gen AI. What kind of challenges is that going to pose, right? Is this the answer to everything, or is this just creating another mess, right? So we need this team of experts and senior people to think beyond what we work on every day. And the industry advisory board is open for institutions to join. So we're at the moment running a program to think about the composition of the IAB. We want even to expand the number of seats in the IAB. So this is almost like an open invitation for the industry to join us and to help with these 3 aspects.
Well, thank you so much. And I think the contributions of you four show very much what is in the world today, what we could achieve. What I would like to hear from each of you is whether you see developments in the future which will enhance this, and what everyone, and that would be traders, it would be governments, it would be regulators, whoever it is, can do to enhance this development, to have more supply chain transparency. Might be through digitization, might be to something else. Who wants to go first on this one?
I'll
Predict the future, please.
So I
If
think
I'm
if I kind of think about any of the people watching this today, I think the first step that I would go is, and again, if I think about it, I go identity as core, and then there's a whole bunch of documents that are produced as a part of a trade process that leads to the empowerment of various use cases, you know, ESG compliance, etc. So I would almost say the first step is have a look at how much money you're spending just on data cleansing activities internally on your supplier side reporting or your analytical projects on your customer and revenue, and see if there's a case for you to potentially go and say, you know what, you know, I could rather invest this into something more sustainable. For example, if I gave my customers or my suppliers LEIs and I work with them, does that solve my data challenges? Is it cheaper? And do I actually end up getting better results? And you can potentially, if you're a part of an association, do a similar activity at an association level to go and say, how many data issues do we have? How much do they cost? And is it actually cheaper resolving them using the existing infrastructure? And I think the only second thing I would say is I don't think anyone should stand back from entering in digital solutions at any point. I've seen the market be a little bit nervous, going, I'm not sure if this is the right one or this one. Should I go blockchain, non-blockchain? I think going into an activity like that is valuable regardless, because you're going to understand what the implications on your operating model is. You're going to understand how you can actually transform, you know, some of your products and services with your customers. So even if you don't hit 100% scale, there'll still be value in that journey. And I think, again, to Stefan's point, you know, just ensure that as you select suppliers or as you select vendors, you know, keep ensuring that they are aware of initiatives like the DSI at the International Chamber of Commerce, so that when those standards do come in, that's the agency that helps you with the adoption drive, and the investments you've already made just becomes more valuable over time. So please do not go into the digital space. Please do lean into it.
You're very convincing, Oswald. Who wants to go second?
If I may, Richard, the UN estimates the trade volume in 24 in around 33 trillion US dollars, so it's huge and it's even growing. At the same time, we see the development of a multipolar world with major blocs doing things differently. So we're living in very, interesting times to say the least. And this is why I believe everyone should use today the platform of choice that they want to work with, that help them, that fills in into solving the requirements for them. But in the longer term, I do not believe that there will be a single platform in the world. There will be multiple platforms for whatever reasons, and they must interact with each other. So what we need are interoperability standards. We need semantic interoperability. We need protocols. And if you allow me just very quickly to give you an example for the audience, when you send an email today, whatever client you use, whatever email server you use, whether it's Outlook, Android, the email will arrive because there's a protocol, SMTP, that makes that sure. But when you use WhatsApp or WeChat, you have more features, but that's not a protocol. It's a central platform that is controlled by an organization. And we all love the features, but we hate the big firms to have access to our address book, right? And similar things apply to platforms, which is, I would strongly advocate for the development of open protocols.
Lovely. Thank you so much. And we're slowly running out of time, but we have Alexi and we've got Alexandre for some quick views into the future. Let's put it that way.
Yes, very rapidly because everything is already said on the technical aspects. I agree on the fact that we will have further digitization in the future and further harmonization of standards, even if we are evolving in a highly fragmented world, and so it means that we will have most of all a continental approach of the standards. So this, I agree fully with that perspective. But on my side, I will insist not really on the technical aspect of standards and digitization, but I will insist on two major trends for me. This is further tightening of monetary and financial condition in relation with ESG standards. There is no way to escape. In the future, as a company, if you don't increase your transparency, you will be punished by the market and you will be punished and pay a higher premium or a higher spread because you are not relevant in terms of sustainability policy. I have no doubts on that. So credit tightening and more tight monetary condition for those entities not ready for transition and not transparent enough in terms of ESG standards. This level of pressure will be also visible at the level of the consumer side and at the level of the authority. And so there is, again, no way to escape this. You need to work on transparency every day, and so you need to invest on that. And so for me, the solution to promote transparency in the organization of supply chain is, of course, the technical question, how we do that. But most of all, you need to create incentive inside the company. Inside your company, the people need to understand why this is super important. We have operated a global trade survey of 3,000 companies globally. There is an impression of greenwashing across the world because the decider are not really the guys implicated in ESG problematic. And the guys taking the decision on the organization of supply chain, they have most of the time, for 75% of them, responsibility in terms of ESG standards, but their intention to reduce their emission next year is only by a level of 1 to 5% for 55% of them. And we see that those people have no real access to key decision or to top management. So the message is that if you want to increase transparency, you need to improve governance. You need to invest in people who know what they are speaking about when they are speaking about ESG standards and the relation with the industry. So investing in people, for me, is key. You need to take seriously the question of ESG standards. And so accordingly, you need to invest a lot in human resources to promote this transparency.
Thank you so much. Alexandre, everyone
Very
in this
quickly,
world is going to have an LEI instead of a name?
absolutely. So very quickly. So identity is not a platform play; it's a protocol play, similar to email. So you can't don't reinvent the wheel. Don't create an identity system each time you create a platform. That's the message. Use what exists, and there are good standards out there, like the ISO 17442 standards, to enable what you need to enable. Second message, and that's more for regulators and policymakers. National identity systems or regional identity systems are cool and nice, but they are not going over your borders. They don't work globally. So if you create a national identity systems, which exists in most countries, and or create a regional identity systems like it's becoming a trend, think to make sure that it's incorporated into global protocols and identity systems. Otherwise, you will do more harm than good for the companies that you're trying to bring on to the global trade platforms.
Excellent. And with that, I feel that we have run out of time. We've even gone a little bit over. I'm so sorry, Depeche. Just closing off, I think I would like to repeat two statements from the last part of this webinar. And the first one is, when it comes to transparency, when it comes to digitization, do not stand back. We're not going to stop it. And the second one is transparency is critical, whichever way you look at it. Now, if you want to read more about this, there is an article published by Tinubu and TFG on the TFG website, Trade Finance Global. By all means, read it. I think there is a critical task for all of us, not in the least for Tinubu, because, guys, however we put it, we're going to need a system to administer this. We're going to need a system to analyze the data, and that's what Tinubu does. With that, I thank you for your attention, and Dipesh, over to you.
Thank you very much. I mean, wow. I used to joke with a friend of mine actually that we live our modern day lives outside of our 9-to-5 jobs, Touch ID, app-to-app connectivity, one-click everything, just order my lunch in 2 clicks. And then when it comes to work, we deal with an industry that handles 4 billion pieces of paper, trade documents, daily jam locks in trade, and I totally echo Richard. I think the main takeaway here is simplify, simplify, simplify. Why? It increases transparency, resilience, speed, efficiency, and inclusivity. But look, I'm sure all of this is enough to that you've all built up your appetite for breakfast, lunch, or dinner. So we are going to take a 1 hour break. In fact, just under 1 hour, 55-minute break. And do take a break, because a deep discussion about AI, excuse the pun, as an augmenter of rather than a replacement for underwriters. So see you at CET 135. Thank you, Richard, and thank you to the wonderful panel. See you soon.